Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Well, Thursday's excitement flowed into Friday's price action for the Australian dollar after it ended up posting a Japanese engulfing candle or bullish outside range day. From there, the market changed hands around 62 cents and then rallied on to a high of 63.90 on Friday, and this morning extended to 64.10 before plummeting nearly 100 points. From the given price action, the volatility in the global markets was triggered by news reports that the US central bank might tap on the brakes to adopt a less aggressive policy stance in December. However, although the US Federal Reserve made debate on a smaller interest rate, there was many hawkish remarks made by the federal officials last week, saying that high inflation calls for a larger interest rate increase early next month. And that is when the central bank in the US gets together on November 1st to the 2nd meeting, and let's see what the statement has to say. However, there is pretty much priced in a 75 base point rate hike for the beginning of November. So looking at the price action, we still need confirmation to this engulfing candle, and that is from a break of 64.45. This would give further strength up towards the region of 65, 30, 45 and reassess from there. As the current pullback emerges, we do need to see the support level at present hold around 62.80. Otherwise, this may negate this bullish candle and then instead reinstate the downside, which could be around the region of 61.80-85. The euro took the challenge to that top side level at 99 figure 35 on Friday and also this morning, but no or any sustainable penetration has occurred. And meanwhile, the US dollar index, which measures the greenback strength against a basket of 6 major currencies, plummeted away from its 20-year highs after changing hands around 113.81 to a low of 111.80 in New York close, and now trades around 112.12. As I mentioned, Friday's volatility was ignited by the conversations around the market that the US might tap on the brakes for a smaller interest rate in December. Still, we haven't seen a strong clearance upon this down channel and do need to see that from a New York close. Otherwise, we could see the market revert back to the downside and slip further towards that support area around 96. But one takeaway is that, like the Aussie, we've got an engulfing candle. And if we can get a close above 99.35, would reignite the upside to 101 to 103 as a potential target. Well, as we can see from dollar yen, there's been 2 days of very strong whipsaw price action. Did the Bank of Japan intervene? Well, there is still no confirmation to this, given the fact that Japan's Ministry of Finance has not confirmed nor denied the intervention. Nevertheless, the market has dropped roughly around 645 points, and therefore from the whipsaw price action, retreating from 151.93 to the lows now seen this morning of 145.39 and rebounding very aggressively. In light of the pattern, with the downside reached now, which was the call at 145.60.90, has left me neutral for the next 24 hours, as I would like to see how this next move can come back to the upside like previously, or can we see a further slide down to 143? Looking at the British politics as it whirls around the British pound, we can see that the market is still holding to a somewhat firmer account after Friday's close, with the hammer posted and also positive RSI. Could see the market rise back up towards a call of 114.40 to 114.95. The market has been very much in a whipsawed view since the Prime Minister Liz Truss resigned on Thursday, and now all eyes look towards the next contestant, which is Rishi Sunak. He aims to maybe take the 10 Downing Street #1 job after Boris Johnson actually pulled out of the race. As I mentioned, the bulls are still holding for the pound, so let's see if that topside contest can reach its objective and reassess. Well, as the dollar slides on Friday, the market felt the bulls bite back quite aggressively after rejecting the 1,621 level, surges to its objective of 1,664 to 66. However, was rejected this morning. From the rejection, though, we could see one more challenge to that top side, and if so, could confirm this engulfing candle. But the close above 1,666 would need to be sighted, and therefore would give further indication up to 1,684 to 88. Failing that, we could slide all the way back down. So we do need the confirmation in the next 48 hours. Looking at oil, the market was a little bit mixed, but still holding around the region of 84 to 85. In light of the pattern, confirmation still needs to be confirmed. That is around 85.65 clearance. This would give further guidance up towards 88. Until then, we may see the market slide all the way back to $81 as the technicals are negative. So the bulls do need to act. Otherwise, the bears will weigh again on this current pattern and see the slide back to 81 cents, as I mentioned. Well, that's a wrap for the day. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoyed a great start to the new week.